This is Nightly Business Report with Sue Herrera and Bill Griffin.
New phase. The White House and the European Union avert a transatlantic trade war, easing an escalation of tensions as investors watch closely.
Pricing pressure. Some of the world's biggest companies are seeing their costs rise, and they are citing tariffs.
Facebook's faceplant. Revenue growth slows, and now the question is whether a series of recent controversies are taking a toll. Those stories and more tonight on Nightly Business Report for Wednesday, July 25th.
And we bid you good evening, everybody, and welcome. There was a reversal of fortune on Wall Street today. Stocks started this day lower on concerns about tariffs and the higher costs that they can cause. But the markets ended the day sharply higher on late word of a potential change in trade relations between the U.S. and the European Union, following a meeting this afternoon at the White House. The Dow rose 172 points after falling more than 100 points earlier in the session. The Nasdaq gained 91, that closed at a record, and the S&P 500 added 25. Kayla Tausche has more on the trade developments from the White House tonight. Kayla?
Bill, 2 months into an escalating trade fight and after more than 2 hours behind closed doors, the leaders of the United States and the European Commission emerged to announce a suspension of the tit-for-tat moves that have been escalating relations between the two because of a new deal. Here's President Trump.
We also will resolve the steel and aluminum tariff issues, and we will resolve retaliatory tariffs. We have some tariffs that are retaliatory, and that will get resolved as part of what we're doing.
So those economic weapons will be laid down. The European Commission president said that as long as negotiations continue in good faith, no new actions will be put in place.
As long as we are negotiating, unless one party would stop the negotiations, we will hold off further tariffs and we reassess existing tariffs on steel and aluminium.
So what does this deal look like? Well, the European Union will work toward buying more soybeans, buy more U.S. natural gas. They're going to try to streamline regulation in the medical industry, for one, and both nations will be working toward lowering tariffs on non-auto industrial goods. Though we should note, a grain of salt, a spokesperson for the European Commission says no concessions were made and talks are ongoing. You'll remember the U.S. and China reached a similar truce back in May. That lasted about 3 weeks before the administration revisited tariffs on China, and that situation is moving forward. We'll see how the situation with Europe pans out. Back to you.
Kayla, you said non-auto tariffs. Now, what about those auto tariffs? We know that one of the focuses of President Juncker coming to the White House today was to try and head off the threatened higher tariffs that President Trump had talked about. So where do we stand on autos right now?
Well, it would seem that because of those comments, that so long as negotiations and talks continue, that there will be no new tariffs put in place. That would seem to suggest that the U.S. had agreed to Europe to not put any new tariffs on autos in place. But by not committing to lower tariffs on existing automobile imports and exports, that means that the U.S. doesn't have to reduce its tariffs that it places on light trucks that come into the U.S. And similarly, the EU doesn't have to lower its tariffs that the president criticized on cars going over to Europe.
Kayla Tausche at the White House for us tonight. Thanks, Kayla.
As we mentioned, for most of the day, investors were focused on tariffs and rising commodity and materials prices. And that was a big issue for General Motors and Fiat Chrysler in the most recent quarter. Both stocks shifted into reverse in today's trading session as they try to steer their way down a bumpy road. Phil LeBeau has the details.
The auto industry is hitting a rough patch. The problem? Growing trade tensions are pushing up costs. That prompted General Motors to lower how much it plans to earn this year.
We have seen an escalation of commodity prices across the spectrum of commodities, including steel and aluminum, that has been driven by market forces.
Those forces are also weighing on Fiat Chrysler, which cut how much revenue it plans to generate in 2018. For FCA, one concern is the impact of tariffs in China. Investors don't seem to care that there's been no drop in demand for new cars and trucks. Instead, they're focused on tariffs pushing up the total price of a vehicle, or how much automakers pay for raw materials like steel and aluminum. And while GM says it expects higher costs to continue the rest of this year, analysts believe today's warning may be as bad as it gets.
I think this was a good move on their part to kind of set the, at a very high price to set the bar here, and not hoping that things come down as many people might expect by the end of the year. It's possible that steel prices may actually soften a bit. That would just give them upside. So.
The auto industry may get some relief from Congress. There are now 2 measures proposing to limit the president's ability to institute higher auto tariffs. This, as President Trump considers instituting a 25% tariff on imported vehicles. Phil LeBeau, Nightly Business Report, Chicago.
And like other domestic automakers, Ford is contending with high costs associated with those tariffs on steel and aluminum. The company reported a decline in earnings of almost 50%, and the company lowered its 2018 earnings projections, citing, among other things, a disruption in production of its popular F-150 pickup and weak sales in China. And that sent shares of Ford lower in initial after-hours trading tonight.
Higher costs are also being felt over at Boeing. Despite posting better than expected earnings, the company's full-year earnings forecast missed estimates. The plane maker also cut its projections for its key defense business. Boeing, which calls itself the single largest U.S. exporter to China, saw its shares fall in trading today.
And you can add fellow Dow component Coke to the list of companies seeing rising cost pressures because of steel and aluminum tariffs. Company today said that that's translating into higher prices on its carbonated sodas in North America.
The general cost inputs, the tariffs on the metals, it's one of many factors, caused us to go out in the middle of the year with our bottling partners and announce a price increase, which is pretty unusual, but it was the right thing to do for the business for the long term. We're not a primary direct impact from some of these tariffs, but of course it flows through our supply chain in all sorts of different ways, and ultimately that will have to pass through.
In its most recent quarter, Coke reported better than expected earnings and revenue thanks to rising demand for its new Diet Coke drinks, and that helped shares gain more than 1.5% today.
So let's turn now to Mohamed El-Erian to discuss what we learned today from all of those latest earnings reports that you just heard about, and also the fresh round of talks on trade out of Washington. He is the Chief Economic Advisor at Allianz. Welcome. Nice to see you as always, Mohamed.
Thank you, Sue.
It's hard to know where to start because there was so much news today between the earnings, but also the late developments on trade. So let me start there. You have penned several pieces about the different scenarios for trade, one of which you call a positive risk scenario, something that goes beyond a still free but fairer trade system. Did we start to see the seeds of that this afternoon?
We did. It's still early days, but we did, because we heard about zero tariffs. We heard about reforming the WTO, which anchors the rule-based system. And there is a positive risk scenario out there, which is that at the end of all this tit for tat, on the tariff side, you end up with a trade system that is structurally stronger. It is not the baseline. I think the baseline is still the free trade that we know, but a little bit fairer with a few tweaks. But it's important to recognize that there is a left tail, a bad risk of a full-blown trade war, and there's also a right tail. And I think the markets are starting to appreciate that.
But I'm struck, Mohamed, that on the very day that we hear from some big companies about the higher costs associated with these aluminum and steel tariffs, the Boeings, the General Motors, the Coca-Colas, now suddenly we're opening these negotiations with the EU on those very tariffs. What's an investor to do with this new information?
So an investor is to be reminded of two things. One is that the reason why economists are nervous about tariffs is because they are stagflationary. The first part is the inflation part. Costs go up, companies then pass on the higher costs into prices and normally do a little bit more because they have the excuse to raise prices, and then demand comes down. So you get this stagflationary process. And today was a reminder that phase one and to some extent phase two have been triggered. But we got a second reminder, which is that there is a difference between the journey and the destination. The journey was always going to be bumpy. because there's a risk of escalation, there's a risk of a mistake, there's a risk of an accident. But the big issue for the marketplace is the destination, to see through the journey. And I think that today we improved the probability of a better destination.
Speaking of better earnings, let me turn you to earnings before we have to let you go. And a number of the earnings reports that we have gotten have been pretty good. The economy seems to be firing on all cylinders, certainly.
It is, and the U.S. economy will continue to outpace others. And you will hear me say on and on that America will outperform. But what you also saw today is that there are international headwinds, that the global economy as a whole is getting trickier, and that the U.S. will continue to register strong growth, but people have to also pay attention that the neighborhood is getting weaker.
Mohammed, thank you so much for spending time with us. Mohammed Al-Arian with Allianz. Bill?
Time to take a look now at some of today's upgrades and downgrades. We begin tonight with Walmart shares, which were downgraded to hold from accumulate at Gordon Haskett. The analyst there cited margin outlook uncertainty, and he expects shares to be range-bound for a while. Price target $92. Shares of the Dow component fell a fraction to $87.90. And that same analyst at Gordon Haskett upgraded Target to accumulate from hold. The analyst cited the recent acceleration in store traffic at that retailer. Price target now $86. That stock rose a fraction to $79.99.
Lockheed Martin was upgraded to outperform from market perform over at Cowen. The analyst cites the company's improving growth outlook and above average cash flow. The price target is $370. The shares rose to $324.36. Spotify was downgraded to hold from buy at Pivotal. The analyst cites valuation given the stock's recent run-up. The price target is $200. The stock was up 18 cents to $187.99.
Still ahead, new hope. Biogen's experimental Alzheimer drug shows some promise, but experts say the latest study paints an unclear picture. Yet another weak reading on the housing market. A report out this morning said that sales of new homes in June fell more than expected to an 8-month low. The numbers for May were revised lower, and that pressured shares of home builders in today's session. But the decline in sales was not due to weak demand, and that's what makes this housing market so peculiar. Diana Olick explains.
Stephen Paul of Mid-Atlantic Builders is still putting up homes in suburban Maryland, but he admits the market isn't what it was just a few months ago.
The temperature is lowering a little bit. It was peaking in March. Sales were very strong in March. We set a lot of records, and it's steadily been dropping.
Sales of newly built homes nationally dropped just over 5% in June compared with May, and mortgage applications to buy a newly built home were considerably lower than June of last year. But this is not about weak demand. It's all about high costs. First, rising interest rates. The average on the popular 30-year fixed shot up to start the year and then kept moving higher. That, and builders are having to raise home prices to account for higher labor and material costs. Duties on Canadian lumber imposed late last year vastly increased its costs, and recent tariffs on steel and aluminum are only adding to that.
Builders have to be very careful. It's a fragile situation with raising prices just to recapture costs. But right now we're in a position where we have to raise prices just to break even on those price changes. I'm very nervous about these price increases. I don't know where it's going to end.
Demand for housing right now is incredibly strong, especially in close-in suburbs like this one. But much of that demand is coming from younger buyers who can't afford to pay premium prices. And builders right now say they can't afford to build anything but premium homes. For Nightly Business Report, I'm Diana Olick in Bethesda, Maryland.
Facebook shares hit a record during the trading day, but the stock turned lower after the company reported a disappointing quarter. Despite reporting better than expected earnings of $1.74 a share, revenue of $13 billion was weaker than expected, and investors Well, they sent that stock lower by as much as 20% in initial after-hours trading. Julia Borston has more on Facebook's results.
The big surprise in Facebook's earnings, the company fell just shy of expectations on revenue, daily active users, and monthly active users. This comes amid questions about what kind of impact the Cambridge Analytica data scandal and new European privacy regulations called GDPR are having on Facebook's advertiser and user numbers. It looks like we're seeing that impact in Europe in particular. Daily active users in Europe dropped by 3 million from the prior quarter, the first time European daily user numbers have declined. This surprising Wall Street. Investors had expected the company to continue to shrug off the impact of the privacy scandal and regulations. Facebook shares hit a new all-time intraday high before the company reported earnings. For Nightly Business Report, I'm Julia Borston in Los Angeles.
UPS delivers for investors, and that's where we begin tonight's very busy market focus. The delivery giant's profits and sales rose at a faster than expected clip as international and e-commerce sales both took off. The company said it is optimistic that it will hit the top of its guidance in the current quarter as well, thanks to broad demand.
The consumer continues to feel comfortable buying online and increasing the sales of the consumer side. And then what we see on the industrial side is we see things like healthcare, the industrial side of retail, as well as some industrial manufacturing also increasing. And that just maintains kind of some of the strength that we really started to see at the beginning of this year.
UPS shares climbed nearly 7% to 120.20. After the bell, Visa said a rise in customer spending translated to a better than expected profit. Visa kept its revenue guidance for the year, but it said it expects earnings to come in even higher than initially thought. Shares were volatile in the after hours. They ended the regular session up nearly 2% at 142.64. Anthem's decision to scale back its presence in its Affordable Care Act markets helped that health insurer hold down patient medical costs this quarter. The company said that the drop in expenses, along with higher premium rates, helped earnings rise, and that topped expectations. And the shares rose a fraction today to 247.93. HCA Healthcare treated more patients this quarter, and that helped send profits higher. The upbeat results prompted the hospital operator to raise its full-year earnings outlook as well. Shares climbed 9% today to finish the day at 118.13. Sue?
Bill Northrop Grumman said a recent acquisition and stronger demand in its aerospace systems products helped revenue and profits beat Wall Street expectations. The company also said it expects sales for fighter jet parts to remain robust, and as a result, it is raising its earnings guidance for the year. But investors were hoping for an even stronger outlook, and they sent the shares down more than 6% to $295.50. After the bell, Mattel reported disappointing sales and said it was cutting more than 2,000 jobs. The toy maker is reducing its global workforce and planning to sell factories in Mexico as part of a cost-saving initiative. This quarter's results were largely impacted, however, by customers taking advantage of the liquidation sales held by Toys R Us. The shares fell in after hours and also finished the regular session down 1% to $16.29. Also, after the bell, Mondelez reported a rise in sales driven by strength across all markets. The maker of Oreo cookies also raised its quarterly dividend 18% to 26 cents a share. Shares initially rose in the extended session, but finished down a fraction in the regular trading day to $41.50. And the drug maker GlaxoSmithKline is taking a $300 million stake in genetics testing company 23andMe to try and discover new medicines. Glaxo said it hopes the collaboration will create more effective research and development processes. Glaxo fell more than 1.5% to $40.52.
An experimental Alzheimer's drug from Biogen and its Japanese partner was shown today to slow the decline in memory associated with that disease. The results of the clinical trial were highly anticipated because research in this area has been littered with failures the last few years. And there are still concerns tonight. Shares of Biogen fell sharply in initial after-hours trading after that report. Meg Terrell has more on the results here. What did they show? I mean, it sounded promising, but the stock fell. What happened?
That's right, Bill. Well, it's important to remember that the stock had run up quite a bit into these results. And moreover, they were a little bit confusing. But on their most basic level, the highest dose of this experimental Alzheimer's drug was shown to reduce the progression of Alzheimer's by 30% compared with placebo. And on top of that, the drug was also shown to clear the amyloid plaques from the brain that are associated with Alzheimer's disease. Experts in the field say this is very important. Those two things appear to be linked, that removing those plaques perhaps had an effect on the disease progression. It's important to note, though, that patients were still getting worse. This is not improving the symptoms of Alzheimer's, but it is just slowing the decline, that loss in memory and the ability to think clearly, guys.
Might that be why the stock did fall in today's trading session? You did point out the big run-up that it had, but the lack of clarity on those results maybe hit the stock.
Yeah, well, it was expected that it wasn't going to improve the symptoms of Alzheimer's disease. We already knew that. We knew it was just going to slow the progression. What it looks like analysts are focusing on here in terms of the stock's decline are a few things. While the highest dose appeared to work very well, the lower doses didn't appear to work quite as well. People like to see a very balanced response sort of through the doses in these clinical trials. There was also another measure of cognition in this trial, that thinking clearly and memory, that didn't meet statistical significance. And people are a little bit worried about that measure because it's an important goal in another study that Biogen's running.
Yeah, I mean, let's talk about that. I mean, the one you're just now talking about that we got this afternoon is for early onset Alzheimer's, but they have another study that they're doing right now, another drug that they're working on advanced Alzheimer's. What does that do to this?
Well, so they do have a more advanced drug in clinical trials. That's just in the later stages of testing, so it's potentially closer to market. Both of these drugs are being tested in early stage Alzheimer's patients, not necessarily early onset, those younger patients, but just folks who are early in the stages of the disease. But a lot of eggs are in the basket for Biogen for that later drug. It's called aducanumab. They've invested $2 billion in running that clinical trial program. Some folks may say because that one measure didn't meet statistical significance, that doesn't bode well for that trial, but others are saying that connection between clearing the plaques and the improvement in cognition is very important here.
As always, we just have to be patient and wait for the trials to finish.
That's right.
Meg Terrell, thanks as always.
Thanks.
And a legend in the auto business has died. Sergio Marchionne, known for his bold decision-making and that trademark black sweater, was widely credited with turning Fiat and Chrysler around before combining those two companies. Marchionne was suddenly forced to step down from his dual role as CEO of Fiat Chrysler and Ferrari last weekend. The company said he experienced unexpected complications from shoulder surgery that left him gravely ill. Sergio Marchionne was 66 years old. It is officially hurricane season, and some energy companies are working hard to keep their customers from losing power. That is especially true at Duke Energy and a special high-tech control room in Charlotte, North Carolina. Jackie DeAngelis is there for us.
Last year's hurricane season hit hard, with severe power outages that lasted days and in some cases weeks. With the season underway again, it's no surprise that utility companies are bracing for it, using technology to secure the power grid to make it less vulnerable to Mother Nature. Duke Energy is one, committing $25 billion in investment over the next decade in the 6 states it serves to continue updating and modernizing the electric power grid. $13 billion of that here in North Carolina.
They call this the Star Wars room, but what you're seeing here isn't science fiction. It's Duke's Energy Control Center, and it's monitoring energy transmission in real time.
What that means is power crises can be spotted and dealt with more quickly using smart grid technology. And in some cases, problems can be averted or fixed remotely, or can even heal themselves. In the case of Hurricane Matthew in 2016, outages that lasted 6 days would now be cut in half because of control rooms like this.
With a click of a mouse, we can restore power. We have an intelligent, smart thinking grid that can actually anticipate outages and reroute power to keep service on for customers.
And it's not just hurricanes, it's cyber attacks too. Duke says it's not a matter of if, but when.
As we talk about all of the new devices and technologies that we can deploy, we actually have to think about that within the context of cybersecurity, because we could be increasing risk if we're not particularly vigilant adding new digital devices to our systems.
But critics say rate hikes for consumers are estimated as high as 17%, and that the improvements that are being made, like home monitoring, are not worth the cost, and that while the energy grid needs upkeep, the efforts made to modernize it won't offer consumers enough.
We think these investments will deliver great value in the form of reliability, in the form of more information, more options on energy efficiency, more ability to add renewables to the system. So finding that equation that maintains a focus on price, delivers value to customers, but also maintains a good investment thesis for Duke Energy investors, that's the balance we're always trying to achieve.
Companies across the U.S., including PG&E, Con Ed, NextEra, they're all investing in the smart grid. Estimates suggest the global growth rate is 9% per year and likely to increase. For Nightly Business Report, I'm Jackie DeAngelis, Charlotte, North Carolina.
Finally tonight, someone in California beat the odds. The lucky winner of the Mega Millions jackpot, worth more than $500 million, purchased the ticket at Ernie's Liquors in San Jose. And if that person took the lump sum, he or she would be left with $308 million. And even after federal taxes, that's still not too shabby.
No. So we didn't win.
We would have taken it, yes.
We would have come back to work anyway, though.
We would have.
That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.